World Bank rates Nigeria's port concession model best in Africa. Russia-Ukraine war calls for Middle East food sovereignty amid a looming wheat crisis. Hong Kong Hang Seng slips nearly 1% in mixed Asia trading day. What should we expect as CBN's 284th NPC meeting commences? This is Business Express on the network service of the Nigerian Television Authority, the NTA, and we are reaching you from Abuja, the nation's capital. I am Benny Adams, your guide. It's time to talk business, and we start with the NPC meeting where the Central Bank of Nigeria Monetary Policy Committee convened for the first time this year and unanimously decided to hold the benchmark interest rate at 11.5% while keeping all other monetary parameters unchanged. We have joining me via telephone an economist who is with SPM Professionals, Paul Alaji. He will be shedding light on what this mean for the economy and expectations as the CBN gets to sit minutes from now. Mr. Paul, are you with me, sir?
Yes, thank you so very much for having me. Good afternoon.
Good. The MPC is right now meeting at the CBN, exceeding the usual briefing time. What are the issues before the committee? In your own opinion, what should this committee be looking out for from the last time they held their meetings and from the events that have taken place up to this point, talking about the events and issues around the economy?
Usually, you recall that MPC meetings usually take 2 days, but it's taking longer than usual because the meeting has been collapsed into 1 day. MPC faced a decision will be faced, it's now faced with some unprecedented and some new challenges. As at the last time MPC met, Russia has not invaded Ukraine. Today, Russia has invaded Ukraine. 2020, Nigeria imported wheat worth over 100 billion from Russia. Monetary Policy Committee and of course the Central Bank of Nigeria have continued to intervene within the agro sector. I'm sure this will connote some of the things that will influence decision. Again, the total import of wheat alone to Nigeria in 2020-2021 was over 800 billion in Naira. What does it mean? We have started seeing some level of high inflation at 15.7%, the last report released by the National Bureau of Statistics. What it means is that NPC, we have to face difficult decisions. If they increase rates, it will bring down. It may bring down inflation, but it may increase. It will definitely bring more foreign direct investment into Nigeria. But high rates will also influence inflation to go on the high side. But leave that side. If there is rates, that is money supply in the circulation will increase, and if that increases, you are going to see high inflation, but you will not see more foreign direct investment. So we have to choose. Do we want to have more foreign direct investment, which of course will help with our foreign reserve challenges, or we want to tame inflation, either for inflation to increase or reduce? We all know that as we speak now, inflation is very high. The causes of inflation, however, as we speak, they are not majorly monetary driven. Today, PMS is cast, and we see CQ on street of Abuja, Lagos, and few other places. The AGO, that people is now selling at above 600, 700 naira per litre. We are ahead of aviation fare and so on and so forth. These are real issues monetary policy committee may take. And these are not just caused by Nigeria. They are global challenges. As we speak, Syria alone, I beg your pardon, they are faced with the same high prices and inflation inching up. The same in Libya, another producing nation, facing the same challenges that we are facing because the world is up here. So monetary policy is sitting on a very tough bench and they are going to make very tough decisions. And I think that the way we have a monetary policy committee interact with Nigeria, making policy to make life better for Nigerians, we need great authority, evidence the Ministry of Trade and Investment, as well as Ministry of Finance, to also come so that we can have these three legs function the same way.
Okay, before we see these three legs coming to collaborate to have a definite decision that will benefit all of us, if we are to choose the FDIs now, are we sure that these FDIs will flow in at the time that is needed and also in such a volume that will cushion the effects of these challenges that you've enumerated? Or we are to go for more money in circulation? How do we get to manage the inflation rate?
Well, if you increase rates, FDI will certainly flow in, but inflation would increase. And that's not what we want. Inflation is already high. Will FDI come? Certainly yes. But it will not come to the real sector. It will come through portfolio investment. Once the economy becomes further unstable, the investors will leave the country, which will pose, in fact, more challenge to our country. My best advice for Monetary Policy Committee is to hold rates, because the environment is uncertain, it's not predictable. The Ukrainian president has been calling on his counterpart from Russia in Moscow to come for talk so that we can have relative peace around the world. But that has not happened. We hope that Putin will yield to the call of to the voice of reason so that the world can know peace, especially as it has to do with supply chain. So to increase rate or to reduce rate will be to be tampering with an already volatile economy as we have it today, both in inflation and also in foreign direct flows.
Okay, from your suggestions, if you have to take from your suggestions, we should maintain rate at 11.5%. Following your analysis, if we increase, is not the solution. If we decrease, is not the solution. But let's take a look at interventions by the CBN. Sectors like the power have remained a source of concern to the economy. Do you see them also considering injecting funds in this particular sector, despite your suggestion to retain rates?
Well, central bank have even intervened in some of our sectors that are weak. And you know, what central bank is doing is of medium-term stopgap. The real issue with power is that we have three legs like our economy: generation, transmission, and distribution. When some of these sectors, some of these legs were privatized, I doubt if those people that bought them had capacity to manage. There are some organizations with capacity, but there are some others without capacity. There are three conversations apart from capacity, the fourth one, around power. So it is not just for central banks to intervene by giving further loan to people. We need to discuss quality of power. It's not just to have power, but as also industrialists, I can tell you, even when the power is there, they have capacity to damage equipment. So quality also needs to be a conversation that must come to the fore. Apart from those, we also need to talk about competition. You see, the reason why we are not getting power correctly as we are getting telco is because when we privatized telecom industry, there were direct competitors. They were not, they were vertical competitors. They were not horizontal competitors. I give you an example in Lagos, in Ikeja, and you have the Ikeja Electric, you have Eco Electric, but the two does not interact. Eco Electric have its market carved out for it on the island, while Ikeja Electric have market carved out for it on the mainland. You cannot extend wire from Ikeja to Marina. It's not possible. So there is nobody competing with anybody. These are real issues we need to talk about before we have central bank to come and intervene. So the issue of competition, the issue of quality of power, the issue of capacity capacity, and more importantly, there should be sanctions for those who are not. I think we also need to review the agreement that some of these Gencos and Discos have, because they've not been able to meet up with what government requires this moment today.
Well, you've highlighted the challenges and possible solutions. I want to take you up on some of those key issues that actually drive every economy. Talking about power, telecommunications, and the use of technology to make things easier, to increase production. In all of this, with the challenges we are facing today, what is your suggestion on the way to go in harnessing and looking for alternatives, particularly to energy?
Well, you know that the current government is doing everything to work with Siemens so that we can have improved power generation. And I think it's the way to go. I also think government needs to partner with the likes of international repute. We have quite a number of other organizations that have similar power. We have General Electric and so on and so forth. I hope that the government today will correct the mistakes of the previous privatization so that we can get power correctly. Again, we need to make policy around the quality of data supply by the telco companies, because it's becoming more challenging and more concern to Nigeria. The role of NCC must also come to the fore to protect the rights of consumer, and by extension, Consumer Protection Council must also do the same to protect the rights of Nigerians as regards some of the things that, because that sector has been privatized, and I can tell you, operators in the sector continue to declare billions, hundreds of billions, and trillions. There is no reason why Nigeria should not enjoy the service. BTS should be properly maintained. Sites should go up at when due, so that Nigerians can have more access to communication through mobile communication and also through data. Other factors that affect the economy, generally, we cannot have this conversation if we both don't have sufficient energy for me to use my phone to call you, energy for you to get to your studio today. For an economy, energy includes the following: power, which we're having challenges with. Secondly, we need energy, which is PMS, to drive our vehicle. We need diesel to drive our factory. We need gas to drive our home so that we can have food to eat. We also need energy in our planes, in our jet, for them to fly. More importantly, we need energy for our businesses through data. When there is no energy in human, you rush such person to an ICU, you rush such person to an hospital, you call for a medical professional to check. For the case of our economy, we need to go back to round table and also call some of our professionals to help bring back the economic challenges around the economic energy that is missing in our country today. I believe we can solve these challenges, and I believe that we should do something about it, because rather than going up, externalities of war is what is having impact on us as a country this moment today.
And it's not just only Nigeria, it's a global issue. Well, quickly...
Global. Syria alone is facing worse crisis than Nigeria right now. I can tell you, besides Syria alone, we also have Libya. I just had an interview on Libya media, and I can tell you that the crises are more. Why? Because, and this truth must be told, Libya produced oil such as Nigeria. In fact, in two quarters away, Libya overtook Nigeria in terms of oil supply. But like Nigeria, Libya has refused to build functional refineries until West African countries, North African countries that produce oil, especially Algeria and Libya, then Nigeria, West African countries, and as a matter of fact, the biggest population, the huge population in Africa, the largest population in Africa, build refinery. I am sorry, whatever happens between Ukraine and Russia, we continue to have negative impact on our economy.
Okay, quickly, Mr. Alaje, before I let you go, President Muhammadu Buhari possibly tomorrow will be commissioning the Dangote petrochemical plant. What effect will this likely have on the economy?
Massive positive effects. Likely, it's going to help our foreign reserve reduce importation. It's also going to help to boost employment. Unemployment is very high, perhaps one of the highest in recent history. It's also going to help with the quality of naira. Quite a number of things that it's going to do. Honestly, we need to encourage when we see good move, and I also expect government to support more private sector initiatives. Let's bring more competitors, more people to build, because it's the way to go. Government cannot employ everybody.
Sure.
Private sector-driven initiative must be supported so that we can be assured of growth and greatness as a nation. The greatness of Nigeria is not going to come by those just in government. It's going to come with the strength of our industry. It's going to come through the strength of our factory, and our manufacturing component of our GDP must grow to between 50 to 60%. At that time, we can say we are getting to the point where we are going to be as a country.
Thank you so very much, Mr. Paul Alaje, for sharing your thoughts with us at this particular point in time. And we hope that the NPC meeting will come out well as expected.
Thank you so very much for having me. We hope so too.
Thank you. Moving on, the World Bank has adjudged Nigeria's port concession model the best in Africa. A team of experts from the World Bank Nigeria office on a working visit to the Nigerian Ports Authority. Headquarters in Lagos assured that the group would continue to partner Nigeria and other interested countries to develop transport infrastructure and services that are safe, green, efficient, and inclusive. Reacting to the bank's positive assessment during his meeting with World and International Finance Corporation (IFC) officials, the managing director NTA, Mohammed Bello Koko, stated that the port concession exercise has clearly enhanced Nigeria's goal of becoming the leading blue economy in Africa. He added that the administration's focus is to facilitate a port-led industrialization in the country through infrastructural renewal and deployment of modern technology tools. And the federal government is on the move to review the Weights and Measures Act, regulations and table of fees with a view to guaranteeing customer satisfaction and generate revenue for government. To this end, the Minister of Industry, Trade and Investment, Nia Debayo, inaugurated the committee for the review. Value for money for service delivered or product purchased is the expectation of every customer. And to achieve this, the Department of Weights and Measures is empowered by law to ensure that measurements for trade are accurate, fair, and legal. This law came into force in 1962 and was only amended in 1974. And since then, its potency has been overtaken by global trends, which the Minister of Trade says there is need for thorough review of the extant laws and regulations to make it bite.
The need to actualize the implementation of the Nigerian National Quality Policy, NNQP, of the Federal Government of Nigeria, approved by the Federal Executive Council at its weekly meeting of Wednesday, the 27th January 2021, made it imperative for a review of the Weights and Measures Act and other sundry legislations.
If you look at the tables of fees presently paid by defaulters, they are insignificant considering the current economic realities.
We want to attract investors so that our law will be certain, it will be internationally compliant, and on the whole, the nation will benefit for it.
The 10-man committee has 6 weeks to carry out a holistic review of the current regulations and propose new legislations on any gaps to conform to the ease of doing business strategy. The yen extended its decline on Monday, and the euro and sterling came under pressure, with investors awaiting Federal Reserve's Chair Jerome Powell's remarks later in the day. And African countries, including Nigeria, are looking for alternatives that will replace Russia and Ukraine as their major supplier of produce. These countries include Egypt, Nigeria, Bosnia, Sudan, and South Africa. India, the second world largest producer of wheat, said is in talks with Africa on supply of the grains. The government has given assurances to expand production this year to boost export and meet the demand of the African countries. In the meantime, Nigeria is already on the move to cut importation by at least 60% before the end of the year. Wheat farmers are now producing in both wet and dry seasons in 13 states. Before the Central Bank of Nigeria intervention, Nigerian wheat farmers were producing about 60,000 metric tons annually, and yearly demand stands at between 4.5 to 5.0 million tons. Let's take a trip to the commodities market. And still talking commodities, oil prices jumped $3 on Monday with Brent above $110 a barrel. Brent crude futures climbed $3.44 to $111.35 a barrel, adding to 1.2% rise last Friday. U.S. West Texas Intermediate crude futures rose $3.54 to $108.24, extending a 1.7% jump last Friday. Let's now join Muplang Dakok for a recap on how the Nigerian stocks fared last week.
The equities market ended last week on a negative note in a week of sell-offs and buy interest. The NGX All-Share Index closed at 47,282.67 points to reflect a decline of 0.33%, while market capitalization fell to 25.483 trillion naira. Investors exchanged 2,449 billion shares worth 20.6 billion naira in 20,764 deals. All indices finished lower with the exception of the NGX Mary Value, NGX Lotus 2 and Industrial Goods indices, which appreciated, while the NGX ASM, Growth and Sovereign Bond indices closed flat. The financial services industry led the activity chart in the week. It was followed by the ICT industry and the conglomerates industry. FCMB Group, eTransact International and Fidelity Bank were the top traders in terms of volume. They jointly accounted for 1.472 billion shares worth 5.064 billion naira. A total of 70,961 units of exchange-traded products ETPs valued at 9.1 million naira in 28 deals were traded in the week, as well as 60,695 units of federal government bonds valued at 63.5 million naira. 21 equities appreciated in price in the week. 45 equities depreciated in price, while 90 equities remained unchanged.
It's a negative open for the Nigerian equities market as the NGX All-Share Index depreciated this Monday. At the close of trade, the All-Share Index dropped to 47,251.93 basis points. Market capitalization also went down to 25.466 trillion naira. 213.569 million shares were traded by investors in 4,485 deals, valued at 2.675 billion naira. And global equities mixed and gold falls after Russia avoids default. Neka Oko has more on that.
Stock markets around the world slipped on Monday as fighting in Ukraine raged on with no sign of a ceasefire, even as diplomatic efforts continued. European stocks were little changed as pressure from the Russia-Ukraine war continues to weigh on global sentiment. The DAX inched 0.06% higher at 14,422.77, with London's FTSE gaining 0.53%, while France's CAC 40 slipped 0.13%. Stocks in Asia Pacific were mixed on Monday as investors reacted to the release of China's latest benchmark lending rate, while oil prices surged 4%. Hong Kong's Hang Seng Index, which rose more than 1% in early trade, erased gains and closed 0.89% lower at 21,221.34. The Shanghai Composite added 0.08%, while in Japan, there were no markets due to a public holiday. U.S. stock futures were lower in early trading after the S&P 500's best week since 2020. The Dow Jones Industrial Average edged down 98 points. S&P 500 depreciated by 0.17%, and Nasdaq 100 declined 0.45%. African markets dropped this Monday, tracking global sentiment. South Africa, Kenya and Tunisia traded below the flat line, while Namibia and Ghana were marginally positive. And that's Global Markets Review.
On that global note, we call it a wrap on this episode of Business Express. Do join us again tomorrow for another fresh edition.